Hey, Kevin here, Top 100 Financial Advisor, two-time author, one-time bestseller, and we are here to talk about the stock market. Today, we're specifically here to talk about Dogecoin. So we are live on Instagram and Facebook. So my eye contact's gonna be a little bit off. Got a few notes and really want to, because people asked, right? Like, what are my thoughts on Dogecoin? Have I changed my opinion? I'm allowed to change my opinion as facts are updated. So if you have not heard, Dogecoin was up like 400% in the last week, if not the last few days. So I've already did a video on Dogecoin very early January, if not late December of 2020. So I'll give you a quick update, tell you what's going on, tell you what I feel about it, what I know about it, and what I think new investors should do. So I want you to listen carefully because I know some people don't read and some people don't listen. If you are a new investor, this is your first time looking into cryptocurrencies, your first time investing, I don't think this is for you. Now, if you're an expert and you got into it months ago, years ago, weeks ago, this ain't for you. Okay. If you've made money on Dogecoin, we don't have no beef, okay? You got your money, I'm happy for you. However, I want to explain what Dogecoin is, very high level, and then tell you the concerns that you need to be looking out for, and more importantly, the patterns that you need to be aware of so that you don't make a lot of the same mistakes that people keep annoyingly make every single year. Because if you ask me the question and I say no, you'll get mad at me, I'm going to tell you why. All right, so what is Dogecoin? Dogecoin started in 2013 as a joke, as a meme. It is not something that was meant to be useful. It is not something that was really meant for people to be investing in and making serious money. It wasn't. It's made of some foreign dog and like really janky language, and that they started it as a joke, a literal joke. It was completely trashed. Like, we're talking like 0.003 cents for years and years and years. And then in 2018, it spiked a little bit and it went right back down to trash up until this year, where it absolutely took off. Year to date, according to some, Dogecoin is up 2,000%, more than 2,000%, as of earlier today, all year. 2,000% in 4 months. That's really, really great. But you know, every time this happens, this is not sustainable. And what happens, especially for new investors, is by the time you hear about it, this is the first time you've ever heard of Dogecoin. You're trying to figure out, where can you get, can I get it from Robinhood? Can I get it from here? Can I open an account and get Dogecoin now? No, it's too late for you. Don't do it. And here's why. Dogecoin up 2,000% over the last 4 months or so, right? Guess what happened? Or guess what else was up around that percentage? Kodak. Y'all remember Kodak from last year? Kodak was up 1,400% in just a few days, and then Kodak just vanished. And I got a list of stuff that starts to happen. It's the exact same pattern. Doesn't matter if it's a cryptocurrency, doesn't matter if it's a stock, it doesn't matter what it is. These types of bubbles always shoot up irrationally, thousands of percent in a short period of time. Everybody gets on it, and then all of a sudden things start to crash and people hold on to it. We call these people bag holders, that you just hold in the bag hoping that it goes to the next level. Like, it's strange for me as somebody who teaches new investors, who try to get you in the right spots, try to protect you when crazy stuff happens, that we just have such a short memory. Like, remember GameStop? Like, 90 days ago, we were just talking about GameStop. Not even 90 days ago, like just up 2 months ago. So 60 days or so, we were talking about GameStop. By the time people started talking about GameStop and thinking about investing in it, it started to get around $400 a share. It ain't touched that since. Last I checked yesterday, GameStop was less than $100 a share. I'm going to type it in now to see where it is. And see, so GameStop right now is $150 a share. Now, if you got in at $5, you're still good. But if you got in at $400, you got in at $300, you're not looking great right now. You lost half your money, and that's the problem. Because when you're new, when you don't understand what's going on and why, and if it deserves to go up, you just hop into it and you don't know when to get out. And that's the problem. And when it's something that's more hype than reality, you don't know what the price point is. You don't know what's good, what's bad, who to trust, and who not to trust. So if you're chasing the stock now, you're chasing the returns now, that's not a place that you want to be in, because you're just hoping that that's it. You just hope that it goes to the next level. If you go back and search your timeline via Facebook, even go back on mine if you need to, and see some of the comments for when GameStop was as hot as it was. When GameStop was $200, they said it was going to $500. When it was at $300 a share, they said it was going to $1,000. When it went to $400 a share, they said it was going to go to $2,000. You know good and well, nothing can sustain that type of growth for very long. And now it went from 400 to 150, and we'll see what happens after this. And that's not the lowest it had ever been. I want to say it got as low as like 75 or something earlier this year. It doesn't matter whether it's a stock, whether it's a short squeeze as a result. It doesn't matter what it is. Go back to 2018, Tilray. Very similar thing happened. Kodak, I just said that for last year. Guns, GNUS was a stock. I think it's Genius Brands International. It was like $1 or something. Shot all the way up to $5. And people were like, oh my God, gotta hop on it. Crashed shortly after that. You remember Hertz? You know, Hertz rental car from 2020, it was going bankrupt, right? Hertz was terrible. Nobody wanted it. They were going bankrupt. Then all of a sudden, within a week or 2 weeks, the stock shot all the way up. The company was automatically not out of bankruptcy all of a sudden. And then things crumbled and fell apart. I already mentioned Kodak. Like, these types of patterns happen over and over and over again, and the people that get burned are usually those who just started, just opened an account yesterday, not sure what to do, don't understand what's going on in the market, and they just see memes, they see people talking about it, they go post about it, and then that's what happens. These are typically pump and dump schemes, or let me just say this, they are generally, it's the best term for it, they follow the same pump and dump strategy. Because if you notice, of all the things I mentioned, GameStop, Tilray, Dogecoin, Kodak, Genius Brands International, Carver Federal Savings Bank, you can throw them in there too. The key frame or key refrain here is they're all super cheap. Think about that. These are all stocks or investments rather that are $1, $1.50, less than $1. In Dogecoin's case, a half a penny, 3/4 of a penny, like super, super cheap. And like nobody's really looking at this. Like, why are all the stocks that shoot up to the moon, right? That's what we all say, shoot up to the moon and then immediately crash shortly after? Why is it that those stocks go up the fastest and crash the fastest? Why are they always super, super cheap? You never see a reputable company that you know of that's not close to bankruptcy that grows this quickly. You never see it with Apple. You never see it with Tesla. You never see it with, Walmart, Ford, Microsoft. You never see it with that. And you know why? Because it's less it can't be as easily manipulated. Because if you take a look at it, if I can get something for, if I got $100 and I can get 10,000 shares for $100, that's a lot. Or I can get 10,000 coins for $100 or something like that. Or I can get 10,000 shares for, $5. Like, the math isn't adding up. And that's how people can manipulate. Because all I need is me and 5 friends, them to get their 5 friends. And now we have 5 million shares. And the minute we put our little $5 or $10 or $100 in it, it shoots up. Then you get in, and by the time you get in, we've made our money, we've bounced, and you're hoping that it goes to the next level, and it probably won't. So I'm not here to tell you that Dogecoin is going to hit $1. And I mean, think about it. Like, we're people are excited for it to hit $1. Not $60,000 like Bitcoin, not 700 and something dollars like a Tesla. We're talking $1. Like, people are putting money into it so it can get to $1. Lastly, I'll say in terms of what it does, other than not really do much of anything, but we're seeing like it's a tweet. Elon Musk tweeted about it. That's why it's going up. Like, don't jump into something that you don't understand. If you don't understand Dogecoin, it's okay to let this one go. Okay? Because you know what's going to happen next. I can't tell you if it's going to be a month. Can't tell you if it's going to be a week. I don't know when, but I've seen it over and over and over and over again. Y'all all saw it last year. There was no reason as to why Hertz shot up like it did. It wasn't none. Name one. I will wait. Name one reason why Hertz took off like it did last year. It makes no sense why Hertz was up 1,000% in 4 or 5 days. But people did it, right? And people lost money and people made money. So if you made money, great, but you had to be in it early. If by the time it started making news, it was too late. You had to have gotten in when it was less than $1. You got in, it was $5, $10, bruh, that's on you. And that's a dangerous game for you to try and play. So yeah, you can pay off your student loans if you were in it super, super early. Same thing with GameStop. Yeah, if you got in when it was less than $10, great. But that ain't when it was on the news. That's not when it was on the news. By the time you heard about Wall Street bets, by the time it was a thing in Clubhouse, it was $200, $300, $400 a share. It was too late. It was too hot, and you had people still jumping in on it at $400 a share, hoping that was going to go to 1,000. Everybody told you it was going to 1,000. I'm never holding. If there's a meme based on your investment, it might not be something that you want to get into. Like, look at these patterns. Like, I mean, you can call me a Dogecoin hater, whatever, but the facts don't lie. The facts don't lie. Look at Tilray 2018. Go back through your own timeline and look at people who are talking about Tilray in 2018. Look at Kodak. Look at Genius Brands International. The stuff is all there, and it happens every single year. And no one can understand as to why they know it's always something random that pushes these stocks up. They're always low quality and they're always super, super cheap. And the gains never last. They never last. So I'm not telling you to jump in now. Well, actually, I am telling you not to jump in now, but that's totally on you. I'm not saying to hold or to wait until whatever time. That's totally up to you. But it's just, my thing is, and I've learned this from being a financial advisor. I've learned this from managing money for millionaires and people on their way to that level. One of the biggest things they do, and Warren Buffett will tell you this, and any person who has had wealth for a while will tell you this, is to avoid the obvious losses. Avoid the obvious loss. And this is one of those. It's a reason why you don't see a lot of these reputable companies, Google being one of them, that like, yeah, everybody, let's just get on to Google, let's make it a meme and let's pump this stock and do it that way. That's not sustainable. Sometimes it works, and when it works big. But this ain't the casino, and people do get hurt every single year. And you can go check Wall Street bets, scroll up far enough, and you'll start to see a lot of this kind of stuff happen. So that's my warning. I'm saying it now. I don't think it's for new investors. If you got $10 or $20 in there, that's fine. Nobody's mad at that. But if you're putting in tens of thousands or a significant part of your wealth in it, you have got to be careful around stuff like this, because I've seen it over and over again. Y'all saw it last year, and we have such a quick memory when it comes to the stock market. And I don't know why. I thought, and when I ask these questions, when I give out surveys, when I'm here on Instagram and on Facebook, or when I'm on YouTube, and I say, what are you trying to avoid? People tell me they're trying to avoid losing money, but they keep doing stuff like this. So those two things don't always add up, and I don't get it. So I just want to make sure y'all are protecting, y'all are playing this safe, but also avoiding the crazy losses when they're blatantly obvious. Because none of y'all would have said, yeah, let me invest in a company that's bankrupt. Y'all wouldn't have said that, but people poured their money into Hertz anyway. Right? Like, nobody would have said, let me put my money into Kodak. Like, if I ask you right now, Kodak is the hottest stock, Kodak is the place you want to put your money to put your money and have it grow, y'all would look at me like I'm crazy. But people did it last year, and ain't nothing new happened with Kodak. Kodak is not, it ain't Apple, right? And they got other stuff going on, but look at the chart. So I'm just saying this is the same pattern that we've always seen. You could throw Bitcoin in this category for what we saw in like 2017, 2018. Because back then, now we know about Bitcoin, right? You got Tesla buying shares of Bitcoin. You got Square buying it. Like, we know what it is now. But in 2018, y'all didn't know what blockchain was, me included. None of us knew. And everybody just pumped it up, and it went up, and then dropped 75% that next year. It's the same pattern. When you get a whole bunch of people flocking to something they do not understand, flocking to something that feels real cheap right now, it doesn't end well. Now, this don't mean that Dogecoin 5 years from now can be a legit thing. Maybe it will. Maybe, but is that a risk you're willing to take? And looking at what we saw from Dogecoin from 2018 to really now, it was trash for 4 years. Now, if you're willing to put some money in it and wait until the crash or after the crash, then do that. Jumping in around that 400 mark, it dropped. People ain't been the same since, right? Dogecoin did this before. Y'all can't hear me? Audio. Oh. So the reason why y'all might not be able to hear me is because I have. Can y'all hear me now? So Facebook can hear me. Instagram can't. Okay, so it's sitting on top of my computer and it probably got too hot. That's why. My bad, y'all. So for those that's joining, because we got more people on Facebook, I'm also on Instagram at the same time. And this battery's about to die. So like I was saying, Tilray, GameStop, Kodak, Genius Brands International, Hertz, like these are all the exact same pattern. So do be very, very careful because it always starts super cheap. There's a reason they're always super cheap, and you never see reputable companies that people really put their money in. Facebook, Google, Amazon. Like, why won't this happen to Amazon? Because it's a reputable company and it's hard to manipulate. You can't buy 50,000 shares or 50,000 coins of Amazon to pump up because it's legitimate. So you gotta see, like, why is this happening? Why do these things continue to happen? Why are they always super cheap? Why do they always shoot up 1,400%, 2,000%? And then what happens next? And they almost always fall right off the map shortly after. So again, if you're new, if this is your first time investing, I don't think this is for you. I'll just be honest with you. I don't think that's a good look, because it can hurt. Because if you're getting in now, this is at or near the top. This investing now in Dogecoin is like investing in GameStop when it was $400 a share. It ain't been back. If you did this 3-4 weeks ago, then you good, right? I would feel a lot differently if that were you. But if it's your first time in it, you're a little late. This happens, and I would just let stuff like this go and go with something that you know is more predictable and it's a lot more reliable. So that's it for me. I've been on 17 minutes. I was trying to keep this to 10. I'll take 2 questions, one from Facebook, one from Instagram, before my phone dies, and then we'll head off. So 1 question from each, and then we'll be done for today. And it can be about the stock market. You can ask about Doge if you want. And then we'll take it from there. So I'm scrolling up on Instagram. I don't see anything on Facebook. Facebook can hear me fine, which is good. There's a program I can use to stream on both. I haven't gotten around to it because I've been doing all the book stuff. And we'll have more updates very, very soon. I just finished the last sweep of edits from our copy editor. So y'all get y'all typos, man. So went through and did that, sent it to the designer, and we should be doing pre-orders here very, very soon. So, all right, should I pull out a Doge? I don't know, man. I don't know when you got in. I don't know what the gain is. I don't know what your comfort level is. So I can't call it. I'm not gonna speculate on that one. Am I eyeing crypto? Yeah, I definitely have my eye on crypto. I think crypto as a whole is solid. I am, so the type of investor I am, and I'll be upfront about my biases. I like putting my money into something I can trust and understand. And at this point in time in 2021, I can trust and understand Bitcoin a lot more than I can, a Litecoin and all the other dozens of coins. Bitcoin is mainstream. I know that Tesla owns, I think it was like, or they bought, or they hold $1.5 billion of Bitcoin. I know Square is jumping into it. I know that PayPal is jumping into it. Those are institutions. I think even Visa is looking to do something, and JP Morgan is looking to do something. I know for a fact Goldman Sachs is about to do something. So because I have all of these big institutions, these huge companies going into it, then yeah, like I have more safety, right? It's still a risk, but it's not the biggest risk in the world. So I want to see, when I start seeing real money go into it, not tweets, not $10 dudes and memes, then that's why I can say, okay, I'm ready to go into the space and trust them more seriously. So crypto as a whole, yeah, I'm a lot more for Bitcoin now than what I was 4 years ago. All right, what are the three things to look for to avoid the stocks and patterns that you're talking about? Great question. This will be the last one that we are going to cover, because again, I got other things I got to do, and this phone's about to die. So other things you can do to avoid those types of these types of patterns where it's super cheap, shoots up, and then crashes. So number one, if it is cheap, so I tend to avoid what are called penny stocks, so $5 and below. So a lot of times when y'all send me something and say, oh, can you look at the stock? What do you think of the stock? The first thing I look up is the price. If it's $5 or below, I'm like, nah, man, just throw this away. Hit at me when the price is a lot higher, because you're not gonna find a PS5 at the dollar store. You're just not going to do it. You're not going to find super quality, this is going to push me to retirement, this is going to create financial freedom. It is super, super rare for you to find it at $5 or below. So you're really risking a lot by doing that. So that's number one. Number two, you want to make sure it's a solid company that has a reason to go up. I can't really tell you that AMC had a reason to go up, especially when Netflix and Disney Plus are out there. There's no reason for AMC to really exist. I'm not saying they're going bankrupt. I'm not saying they're not going to be here ever again. I'm just saying, like, did it really need to go up 50%? No, it didn't. That doesn't make sense. So you want to invest in things that make sense, that deserve to rise. A Bitcoin, because Goldman Sachs is jumping into it, to Square, Tesla, it makes sense as to why Bitcoin would go up. But because somebody tweeted about Dogecoin, why? Like, what happened to make Doge? What logical step did happen to Dogecoin for it to go up 2,000%? That don't make sense. So those are my two things. Number one is price. Number two is, like, is there a logical catalyst? Is there something that makes sense for that one to rise? So those are like the two that I immediately go to. And again, when it's super cheap, $5 or less, it's easy to manipulate, because all I need is $100 and 5 friends to buy like 1 million shares. That's all I need. And then once it goes up, we all tweet about it, and your friends tweet about it, and like it's too easy to manipulate. And that's why you never see this happen with Amazon. You never see it happen with Apple. You never see it happen with Microsoft and stuff. All right. Can we save this live? So I will save it on my page. You guys should be able to save and share it. All right. So, so someone said, Bitcoin is like $56,000. I can afford that right now. No, you can't. I don't have $50,000 or $60,000 in Bitcoin. That's the thing. Like, this is why you want to understand how the market works. And even with Amazon, I didn't buy Amazon at $3,000. Cryptocurrencies as well as stocks now, you can buy fractional pieces of them. And that's why I say that fractional shares are so important, because you think that you need $7,000 to buy this thing. You actually don't. So if you want to, I only have 100 and something, 50 or so some odd dollars in Bitcoin, and that's all you need. Like, if you can put in $50 a week, grow your money through Bitcoin, if that's what you want to do. You don't need to have an entire Bitcoin. You don't need that. As Bitcoin grows, if Bitcoin goes up 50%, you still make 50%. So the percent gain is still going to be there. This is one reason why it's really dangerous for people to go for penny stocks, because they say, well, I only got $100, so I'm going to go get something. I'm going to get 20 shares of something for $5. Why do that? Why put your $100 in trash where I can get $100 of Google and know that's going to grow? So that's something that's a misunderstanding about how these markets work now, that regardless of what you got, $5, $10, doesn't matter. You can still invest in things that are quality. And that's why I teach this stuff like every day. All right. Yeah, good to know, because I ain't got $60,000 either, right? So yeah. All right. And I think Erica's like, that's my thing. I don't understand any of it. If you don't, that's fine. Invest in what you know. If you do understand it, I got a friend who's like super into cryptocurrency mining, and he's good. That ain't me. So if you understand it, go for it. If you don't. And it's okay. You don't have to be in every single thing. All right. So that's it for me. I will talk to y'all later. Y'all will hear more about the book, From Burn to Blueprint, How to Rebuild Black Wall Street After a Century of Silence. It is going to be good. Y'all can check the stories on Instagram and on Facebook to learn more about the book and where you can get it. You can join the watch list for that now. Watch list is free at buildingbread.com/1921. And that's it. So I will talk to y'all later. And I'll make sure I save this video in the IG Live section. All right, that's it for me. Talk to you later. Bye.